Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, September 17, 2021. As always, please don't forget to hit the like button, subscribe to this channel, and share this video. I have a bit of a cold, so this presentation would be relatively short. However, if you're a subscriber, you still get these videos, the ones that are paid. This is called Elite Newsletter. And we have also a speculator newsletter, so we're gonna cover all of these stocks. But for right now, we're going to cover stocks which are pulling back. Market breadth got even worse this week, and this could signal further weakness for stocks in the near term. And Treasury bonds somewhat indecisive, so still we don't really know which way it's gonna break. However, dollar, I think, finally made a move, and precious metals are indeed feeling it, and then at least silver is retesting August lows, while gold moved lower significantly. As always, I'm going to be using my proprietary MasterChartsTrading.com price action indicators. You can see them on this line. This is green, blue, red, and yellow lines. You can go to MasterCharts Trading and click on products, find out more about them. I have trading indicators, I have the indicators and newsletter package, and I have the ultimate bundle, which includes the stock screener. So do go over there and sign up. Let's get to it. So S&P 500 made a new record here in September, early September, and it's been basically pulling back ever since. For the past couple of weeks. Not out of the ordinary. We had similar looking pullbacks. This is perhaps the longest in a little while. Let me see. Although, this pullback here in February was pretty long as well. Is this time the charm where we're finally going to make a significant move lower? I'm looking for a move at least towards this blue support resistance line. Now we can measure it and see how far it is. So from today's level, it's another 8.5%. So if we do pull back towards 4,000, that's another great looking opportunity to be buying stocks if we even get there. Alternative scenario is we simply make a new record and continue higher. For now, nothing really has changed. We have started, our breakout signal to buy this particular security, this particular S&P 500, was back in April, May, as late as June of last year, 2020. You can see that since then there was really no good opportunity to buy. I prefer to buy on a pullback towards this blue line. You can see it clearly hasn't pulled back that much, so we're just waiting and basically trailing. So if you entered, back then, you advance your stop, Your stop is at the blue support resistance line, so that you don't get accidentally stopped out if we get a spike down. So for now, we're just sitting and doing nothing. My favorite activity. Since I do a lot of meditation, I sit and I do nothing. And the same we go for stock market trading. We sit and we do nothing. Same goes for Dow Jones. This is an actual opportunity to get in back in May, June, late June of 2020, and this was basically it. No more opportunities. If you got in, congratulations. So you're sitting in the position again doing nothing. Not really much different from S&P 500. NASDAQ is even stronger. It moved, 82% from the latest opportunity, which was back in April of last year. And you can see again there was no opportunity to get in on QQQ. But once again, you can get in on other securities, for example, within QQQ. And we do that all the time. We trade many different stocks. You can see there's a lot of stocks that we trade. And yeah, you don't have constantly, opportunity to get in on the ETF itself, but you can get in on the components of the ETF. There are plenty of components of the ETF which are available for trading. So yes, you can get in on those. But for QQQ NASDAQ right now, we're again doing nothing. If we got in here back in April of 2020, we're simply trailing at the blue support resistance line and waiting. Maybe it will go even higher. Maybe it will pull back. Who knows? Nobody really knows. So we're trend following. This is a perfect example of a trend following system. Small caps. So small caps have been underperforming. You can see there were opportunities back in May, June, as late as July of last year. There was one last opportunity here in September, and correlations are very high. So in other words, S&P, NASDAQ, Dow Jones, they kind of look similar to one another, but small caps slightly looked different, and we took advantage of that because there was an opportunity and we were able to get in here in September of last year, 2020. Since basically February of this year, we've been trading sideways. You can see we were not really making new records. The last record was made in March here, and since then we're trading sideways. So this is a divergence. You can see that QQQ, here's for example March of this year, kept making new highs, while small caps have not been making new highs. They've been trading sideways. So in my next section, I'll show how it looks on the market breadth. For now, so I'm going to zoom into the price action right this instant. It doesn't look that bad. I mean, we can just stop here and make a new record. That's also a very strong possibility. If general market pulls back, then I guarantee you small caps will also pull back. So a good level to watch for a pullback would be around 199 or 200 here for small caps. But if we make a new record, so a new record is above 234 here. If we make a new record, then all bets are off. We could double. I don't know. So let's look at market breadth. So again, I will very briefly go over market breadth and how I look at it. So if you go to StockCharts.com, you don't have to have an account. This is a free account. So you type in this symbol $NYAD. So you can see New York Stock Exchange advance minus decline issues, and it's an index. So what they do is they take declines, stocks that are declining, and they subtract them from advances. Now if we make it just normal, like whatever, like a line, it wouldn't make any sense because we're subtracting advances from, or the declines from advances. But what does that mean? It means nothing. So you can see it's just it's just nothing. So what we need to do is we need to change this to cumulative. See where I'm hovering, cumulative. And then what that means is that we add the yesterday's number to today's number. And so that makes actually a lot more sense. And we can construct a line, advanced decline line. So we can also put a price. We can put the price of SPX, but we can, if you really want to be a purist, we can put the price of New York Stock Exchange Composite. And you can see that it made a new record right there in September, early September. However, the advanced decline issue, so how many stocks are advancing minus how many stocks are declining. The high was right there, 34,385. Here it was 34,277. So not yet a high for how many stocks are advancing. So this is what we call a divergence. Not a pronounced one, but if we go to what's called a New York Stock Exchange Composite advanced decline volume, so it's $NYUD. That is a very pronounced divergence. You can clearly see it without any, measurements, especially today. So the volume, so how much volume is going down, how much volume is going up, and then we're going to do the same thing. We subtract the volume that's declining from the advancing volume, and we construct this line. And this is a clear divergence. So it started back in June. All right, so let's look at what happened in June. And so if that advanced decline line is correct, then we can expect a pullback towards the June levels, and the June levels are actually exactly around the blue line. So that's June level right there, maybe like right there. So it is reasonable to expect a pullback towards the blue support resistance, which is about, like I already said, around 9% away from today's levels. So market breadth is not looking great. Ideally, we should rally strongly and make a new high for the advanced decline line and advanced decline volume line, but it hasn't yet happened, and it's entirely possible that this divergence will get resolved to the downside. So this is what we call a bearish divergence. Advanced decline line, so underlying market breadth, is leading to the downside, and we can expect a correction in stocks. Will it actually happen? We'll find out very shortly, I think within the next few weeks. So let's be on the lookout for a corrective action for stocks. Moving along to Treasury. So Treasury bonds, TLT, is probably the most important one to watch. This is one of the most important ones I watch. Treasuries are in the downtrend. They started downtrend back in January. We had an opportunity to sell them short a couple of times. Latest opportunity to sell them short right there where I'm hovering on the 9th of July so far hasn't worked out. We can see we're basically trading sideways. Additionally, if we project my support resistance lines into the future, we can see that they're coming down towards the price action. What does that mean? That means that treasuries have lesser distance to travel towards bullish levels. If they break out above this blue line, the blue support resistance line, then I will consider them to be in an uptrend, and many of the trend trading strategies would do the same thing, and they would start buying treasuries. So it will become a self-fulfilling prophecy. So far they are kind of in no man's land, but with a bearish bias, because the latest signal where I'm hovering is actually bearish. So for now, I'm just watching them real closely. If I am correct, and we will indeed get a correction because of this divergence, then treasuries should move higher, because normally when stocks go up, treasury bonds go down, and vice versa. When stocks go down, treasury bonds normally go up. So we will see if this time is going to be the same thing, but I see no reason to expect otherwise. So if indeed treasuries go ahead and close above this blue line, which is not that far, which is like 2% away, chances of correction for stocks will increase even further. Okay, so this is what's called intermarket analysis. So we just analyzed how are various markets, treasuries, bonds versus stocks behaving. In addition, we just analyzed market breadth. So this is market breadth analysis. So putting those two and two together can be quite powerful. Let's see if this indeed will lead to something. So what we're looking at is we're seeing a bearish divergence. We're also looking at treasuries which are approaching bullish levels. So putting those two together, we can say that there is a good chance for stocks to pull back. Okay, there is a good chance that stocks will pull back. All right, moving along to dollar. So finally, this is dollar index DXY. I'm reading. I mean, people are completely freaked out about inflation. I have a friend that I'm going back and forth with, and he's really, a very interesting guy, and he's completely freaked out about inflation. He's a very professional trader, and I'm like, well, again, we need to look at inflation in the context. And yes, we're seeing, prices of eggs and price of apartments and price of gas, and actually gas to a lesser degree. But sometimes food, sometimes weird things like, plastic or tires or cars, for some reason they go up in price. And then I read why, because this is kind of important, why. The reason being is because of the supply disruptions. It's not like we don't have enough cars. It's not like we have communists, outlawing private business. I grew up in Soviet Russia, so I know all about this, quote unquote socialism and communism. We had no private enterprise. We had no desire, or rather no way to make money. It was outlawed. Private enterprise was outlawed. So that was the reason why there were shortages, was because people just, had no way and no desire, and it was forbidden to make a personal profit. You see, it's not forbidden in the Western world. So what we're seeing here is we're seeing supply disruptions. We're seeing disruptions of labor due to various reasons. One reason that was clearly defeated was the reason is for the unemployment benefits. Unemployment benefits are preventing people from getting a job. This is nonsense. Okay, the unemployment benefits have ended. Labor shortages have not. Okay, and again, in many states, unemployment benefits have ended before, like in July and August, and labor shortages did not resolve. So we need to look deeper, and we need to look at other answers for these inflationary pressures. So again, I diverge. So looking at purely price action for dollar versus other commonly traded currencies, this is a dollar index. So this is an index against euro, Japanese yen, Canadian dollar. I'm seeing dollar breaking out. I'm seeing dollar bottoming here back in January, and now attempting to become bullish. You see, this is a bullish breakout for the dollar. If indeed people who are freaking out about inflation were correct, then opposite should be happening. We should be seeing dollar collapsing, because when inflationary pressures are due to loss of faith in the dollar, in the currency collapses, and by extension, precious metals go up in price. The opposite is happening currently. You have to understand that. So we're seeing currency appreciate in price. Okay, I went ahead and I bought UUP. So this is a United States bullish dollar fund. So I bought calls on UUP just the other day. So far, fingers crossed, it's looking good. We just need for this dollar index to build on this breakout, and it's looking, projecting in the future, it's looking good. Okay, so if the dollar is breaking out, if the dollar is pushing higher, by extension, gold, precious metals are being pushed down, because gold, once again, is traded in the local currency. It's, in this case, traded in US dollars. So if we see XAU divided by USD, so if we lower part of this equation, USD, is getting bigger, heavier, it will pull this currency pair lower. You see, this is what's happening. Yesterday was really a clear indication of this. This is another really strong signal right there. 16th of September, big move down, strong move down. Okay, this is a signal. I sent a signal out. So ideally, you should be able to get in short, where I'm hovering within this space. So somewhere between 1785, maybe as low as 1760. I'm not a big fan of getting, short like further away from this red line, but it sure seems like we're gonna retest the lows, okay, of 9th of August. It looks that way, and I'm really not certain we're gonna hold. Okay, so we're see this low right there where I'm hovering around 1618. This is already a third time it's being retested. First time here on 8th of March, 31st of March, and now 9th of August. If we get there, I don't think it's gonna hold. I think we're gonna collapse. So just really very, very rough estimate of how much of a move can we expect. We can expect easily 12% move down. So let's say from the breakout. So let's see where it will take us. Again, this is just projection. Okay, I'm not really saying that this is gonna happen or not, but easily we can move down to like around 1400. This is a very easy thing to do. Okay, and yeah, and actually look how interesting, right? So there's the low from the March 2000, just around that area. So it is quite possible we're going to get in. We're going to get that low. So once again, those people who are freaked out about inflation should look at gold. Should look at also history. When there is a loss of trust in currency, not necessarily dollars, but just anywhere in the history, if there's a loss of trust in currency, then precious metals get stronger. But in this case, we're seeing the opposite. We're seeing not the loss of trust in dollar. We're looking at increase of price of the dollar versus other currencies. You see, so silver is already there. So you see, silver. If you shorted silver right there, actually had a great opportunity right there. 3rd September, 6th September, as late as 7th of September. This is already a nice move. You already could have 8% move, and it's already there. You see, it's already retested 9th of August lows where I'm hovering. So silver is leading to the downside. Silver is a precious metal. It's also an industrial metal. So this is basically what I'm trying to say is, let's wait with all the freakouts about the inflationary pressures and all that. And objectively look at the price action. Price action of the dollar does not support the theory that we're going to see inflation, 1970s style. All right, that's it for this presentation. Again, head over to MasterChartsTrading.com, click on products, select one of the products. Trading indicators are these lines on the chart. So this green, blue, red, and yellow line, they are available for this interface, TradingView.com. All you need to do is sign up, and I'll open the door for you. Now, if you want my analysis, you can sign up for indicators and newsletters. So for my analysis, you will also get daily newsletters. So we're looking at various large caps, ETFs, Forex for the elite newsletter, and various speculative stocks for the speculator newsletter. So if you get that, you'll get daily alerts. And additionally, if you get the ultimate bundle, you'll also get the stock screener. So the stock screener shows which stocks are breaking out above my support resistance lines or below my support resistance lines, and you can customize which ones are, useful for you, useful for your trading, and receive alerts automatically. This is a robot generated alerts. Alright, that's it for this week's recap. Again, don't forget to hit the like button, subscribe to this channel, and share this video. Thanks for watching. Have another great trading week. Bye bye.